And let's fold this all into emerging markets, the push and pull of the treasury market, what the dollar's been doing, and now crude more supportive for EM as well. How do those three things mix together and how does it come out?
It's pretty positive actually for the next 6 months. I mean, we've had this tailwind of a dollar being weaker, rates not going up as fast as people thought, commodities doing better, and China growth better. The oil price has been the one that's been foxing people all year, so with a higher oil price or a steady oil price, that's very good. But we'll probably see rotation in the market because Asia's done pretty well this year, mainly driven by the internet, and we might see that markets like Russia and Brazil will come back.
Yesterday evening I sat down with the asset management wing of Goldman Sachs and with BlackRock as well, and their conviction trade still going into next year was EM. Even though EM has had a terrific run through the year so far, why are we going to continue to see EM outperform?
I think because the earnings have changed. And for the last 4 years, up until the beginning of this year, earnings have been negative, and analysts' expectations have been completely wrong. But this year, we've had earnings up, 24%, consensus earnings. The market's up about 30%. So we've had a little bit of a sort of risk premium or PE re-rating. But the next few years, we will still have sort of above double-digit earnings, and I think that's a real change. And then also, you know, Jonathan, relative to other markets which have done very well, the earnings aren't coming through as strongly. So if EM delivers, it will outperform.
So, David, until now, we've been told EM is attractive in part because of valuations. They've been low valuations. At what point does it become fully valued?
We're probably not there yet. I mean, I agree with Sean. We're seeing a lot of earnings revisions upward. The big fear has been, given that the fact that the Fed appeared as if it was going to be more hawkish, everybody has been worried about this strong dollar. That's clearly gone by the wayside right now. We've seen a little bit of strength more recently. But I think the fear that was out there in EM was somehow that the Fed would derail the emerging markets. That doesn't appear to be the case anymore. And if earnings are getting taken up, as well as, I wouldn't say EM offers great value, but in a world where there's very little attractive valuation on the equity or the fixed income side, EM offers relative value, if not great absolute value.
How dependent is that relative value on commodity prices? I mean, there was a day that EM really was driven substantially by commodity prices. I'm mindful of this as we're listening to Moscow right now about oil.
Yeah, I think that's been declining over the years. I mean, Sean would certainly know better than I am, but what we see in the numbers is that you see more technology, more consumer strength. Is it still highly correlated with commodity prices? Yeah. Yes, but to a lesser degree as time goes by.
Well, Sean,